I want to be long Bitcoin when that 1% gets allocated to the rest of the funds, because that's when you're going to see really amazing incremental valuations. What changed is exactly what you said, Pomp, the regulatory environment. I work in a very regulated world. I'm an investor in so many different financial services companies that are reporting issuers. And so we don't have the luxury of being offside with regulators, not now, not ever. And in 2017, when we were talking about those epic moments, and it's true because I get those things shoved in my face every day, but I point out that when things change, I change. That's when I took my first Bitcoin Ethereum positions in 2017. Obviously, I've done very well with those. But recently, after the regulators in Switzerland, France, Germany, Australia, England, Japan, Canada, all started to change their stance on crypto, it allowed me to start to allocate to it in a compliant way. And that's really what got me going. Obviously, this is an asset class that's here to stay. It's still going through a very nascent phase. I'll be putting a lot more into it as time changes, and still the regulator's not 100% on board, we all know that, but things are getting better. Not just domestically, but internationally. And so I'm an international investor, and in many countries where we're talking about Bitcoin or Ethereum or other assets, other crypto assets, tokens and coins, the regulators opened up. I've gone beyond Ethereum and Bitcoin. I have a pretty big position in USD right now, USDC. I'm moving into some other assets that I'm negotiating right now. I have been struggling with this ESG issue around mining my own coin. As you recall, that topic was really forefront at Bitcoin 2021 when I moderated, and I think you were there, the major miners and how they're trying to deal with this carbon offset issue. I still get people asking me about that. I still have sovereign funds that I service through some of my other companies asking me, what are you going to do around this ESG, because they have these compliance committees. And I know a lot of people debate this issue, but it's not going away. And so I think you're going to see a real move towards places like West Texas, solar, wind, ideas around new generation where it's completely compliant. Hut 8, I'm a shareholder in there now. Jamie Leverton does sustainable mining with flare gas. So I mean, there's ways to get around it, Pomp, and I'm using that to increase my allocation. You know, I'm not a cowboy here. I'm actually allocating capital towards achieving a distributable return of between 6 and 8% a year. And so, you know, we have a lot of volatility in Bitcoin. Not every crypto asset has to be that volatile. So when you start to build out your portfolio, let's go to USDC, you know, you actually can take that as a relatively stable asset and write contracts on it for 60 days, 30 days, 90 days, and generate 3.5–4% yield, which is what I'm doing right now. And so I look at it as a portfolio approach. Some of these things have volatility, some don't. But you know, the biggest problem, which is holding all of us back in the crypto industry right now, is compliance at the institutional level. You know, you go in and you say, look, everybody's talking about this. All right, I'm running, let's say I'm running $1 billion mandate. That's not uncommon. And I want to put 10% into crypto. You have to be able to find a platform that can link to your internal reporting and your external regulatory. You know, it's not like I got if I'm putting a 10% allocation on $1 billion, that's $100 million. I'm not going to download an app on my phone and put $100 million into it. I'm going to have an institutional compliant platform. And the industry's not there yet, Pomp. It's got a lot of work to do on that front. And the more we move towards that, the more capital is going to be coming in. She said, well, look, I keep every coin that we mine at Hut 8. It's sitting on the balance sheet. Every time we get awarded a coin, it stays there. I lend it out so I can get fiat currency to pay my expenses, but I own the coin. So that you're going to trade my stock in a very high correlation to the price of Bitcoin, because the more I mine, the more it stays on my balance sheet, I'm a proxy for the coin. I said, that's a very interesting model. I'm interested because I know every coin you've got since you started has been built on a compliant basis towards ESG. So I'll become a shareholder. So I bought some of her stock, and the stock is volatile as Bitcoin is. She's really starting to trade with the value of her balance sheet. That interests me a lot to solve for my mining issue, because if I want more allocation to mining, I have no risk of getting called out from compliance around ESG with Hut 8. Now, I don't want to sound like an advertisement for them, but if more of the miners did what she is doing, you get more institutional capital coming into the mining infrastructure, which we don't have right now. It's very hard to raise money for mining infrastructure because if you got a facility in Tennessee or Mississippi or something like that, which is not compliant because there's coal energy there, you get all these headaches. And that issue's not gone away yet. I have no choice. I have a compliance department. They have an investment committee. On top of that is a sustainability committee and the ethics committee. I don't have a choice. There's no negotiation. I got to do what they say. And that's the same for another $1 trillion worth of buying on Bitcoin. Same problem. You don't have that problem. I have that problem. And I think what's going to happen is for incremental buying coming in, and I'm saying $1 trillion, if my clients, just the institutional and the sovereign funds alone, and not all mine, but that whole asset class of investor, just did a 1% allocation towards just Bitcoin, that's $1 trillion worth of buying. So we really, really want to solve this problem as an industry. So it's not because you get on one side of the debate or the other. They simply can't check the box and invest until their compliance committees say yes. So all of these new mining operations, what I think is going to happen is you got the existing coin out there now, provenance known or not known, got it. But if you're setting up a new operation to mine coin for the next 30 years, you're going to get a lot of institutional interest in that infrastructure cost. Let's say it cost you $500 million to set up in West Texas. You could probably fund that if you guaranteed those institutions that every coin awarded would go on the balance sheet, stay there, and they could claim to their compliance committees it was mined sustainably through wind and solar, which you can do in West Texas. I want to be long Bitcoin when that 1% gets allocated to the rest of the funds, because that's when you're going to see really amazing incremental valuations. I mean, it depends how fast they come in. I mean, that's when you get extreme extension of valuation. You just don't know. Anytime people say, oh, I know the ceiling on the price of Bitcoin, they have no idea. It could go anywhere. And it's just because it depends. And here's really when I talk to institutions, there's a change in philosophy about their thinking on, let's just stay with Bitcoin. Bitcoin used to be considered for many institutions that hadn't owned it yet, the ones that were just looking at it, as a currency. They're not thinking that way anymore. They're looking at it as a property. So you would buy it in the same way as a AAA office tower in Manhattan. You buy an allocation to coin that you're allowed to own, you never trade it. You own it as an asset. You know it's compliant, it checks the box. You own it on your balance sheet, your provenance, and it's something that you can own as property. And that's where I think we're going. Some percentage will still be traded, but for the big institutions coming in, this is an asset class that is a property. I'll tell you pragmatically what it's going to take to get the S&P 500 putting an allocation to their treasury and their balance sheets. Because, you know, they are interested in starting to explore crypto in exchange for cash reserves. And we'll go into that in a second on USDC, okay? But let's just stay on Bitcoin. That letter that Larry Fink puts out every quarter that dictates BlackRock's positioning for sustainability, we got to solve for that. We got to get Larry on board for Bitcoin on a sustainability model. And if he's okay with it, because that letter actually sets policy for both, think about the way this works, for sovereign funds, who he's the largest asset manager in the world, and for domestic pension plans, and for universities and everybody else. He started this a few years ago with the sustainability issue, and all of a sudden you saw the market capitalization of hydrocarbons like oil companies start to get crushed. Because if you're an institution, and let's say you've got $5 billion under management of BlackRock, and Larry's telling you, look, we're not investing in hydrocarbon distribution companies anymore, whatever his edict is, they're going to be selling those. We've got to get them on board. And if he said, look, you want to own Bitcoin? This is how you can own it and still fit the metrics around global sustainability. That's where we're at. Now, I've taken it upon myself, because I'm not ready yet. I want to go there and see his team and say, look, I'm going to bring a bunch of representatives from the mining community. We got to talk. I mean, I want to be an investor in mining. I don't want to be offside on compliance. I don't want to be offside on ESG. I can't. I don't have that option. I can't go against that mandate. So I'd rather get them on board. We gotta solve this. You wanna see Bitcoin at $1 million a coin? You got to solve this. USDC is interesting. It's a bit, it's a way that you can actually, if you understand what you're doing there, it's a less volatile crypto. You know what it is, and you can actually write contracts on it and get a decent yield, at least more than inflation. If inflation is 2.1%, you got to make 3, otherwise you're losing money each year. That's my thinking on it, and USDC is the way to do it. But yeah, I have really had a major turnaround on crypto. You were part of it. I remember being on the set of CNBC with you in Squawk Box and barking at you like a dog. But at that time, the regulator was barking like a dog too, if you recall. And so I didn't want to be offside on that. Now we have a much more, let's call it laissez-faire environment, but you still have to be compliant. You still have to report. You still have to mark to market. You can't be a cowboy about it.
Yeah.